All right, let's dive into something that's a real head-scratcher. We're talking about a moment when gold, silver, and Bitcoin, the assets people run to for safety, had one of their worst crashes in a decade. And the craziest part, the trigger wasn't some disaster. It was actually good news. So how on earth is that possible?
So get this. Here's the core mystery. President Trump makes an announcement about his pick for the new head of the Federal Reserve, and suddenly these so-called safe haven assets just fall off a cliff. It's the kind of thing that on the surface makes absolutely no sense.
But the real reason is probably not what you're thinking. The truth is often hiding just behind the headlines and the raw numbers. This wasn't your typical market panic. No, it was something else entirely. And we're about to break down the weird, counterintuitive logic that drove this whole thing.
Okay, so to really get why these assets crashed, we first have to understand why they were soaring to begin with. The story of the crash actually starts with a massive rally that was built piece by piece on a foundation of pure fear. For the last 5 years, something pretty unusual has been happening in the markets. Gold has been consistently beating the S&P 500. Now, it's absolutely crucial to understand this is not normal. In a healthy, growing economy, stocks should be leading the charge. When gold is winning, it's like a giant flashing alarm bell signaling some serious anxiety among investors.
And this timeline just spells it out perfectly. I mean, look at this. The handful of times in history where gold has pulled ahead of stocks have lined up perfectly with our biggest economic nightmares: the Great Depression, the stagflation of the 70s, the dot-com bust, the 2008 financial crisis, and yeah, the post-pandemic era. This pattern tells you everything. The recent gold rush wasn't about greed. It was a symptom of widespread fear.
This chart just drives that point home visually. You can literally see how precious metals, which are basically financial insurance, have been a better bet than the stock market as a whole. This wasn't just some random trend, it was a full-on flight to safety. But what exactly were people so afraid of?
Well, it was a whole cocktail of anxieties. Investors were looking at massive government spending and worrying it would devalue the dollar. They saw inflation ticking up. And then you had President Trump publicly calling for a weaker dollar and putting intense pressure on the Federal Reserve. All of this was building towards a very real fear of a full-blown dollar crisis. And that fear is precisely why people were willing to pay a premium for gold and Bitcoin. It was their insurance policy.
And that brings us to the exact moment everything flipped on its head. With all this fear baked into the prices, President Trump stepped up to announce his choice for the next chair of the Federal Reserve, the person who would be steering the entire U.S. economy.
He nominated this man, Kevin Warsh. Now, Walsh was a former governor of the Fed, and he'd served during the 2008 crisis. This single piece of news, this one name, was the domino that set off the entire chain reaction we're talking about today.
Now, what's so fascinating here is the massive clash in philosophies. On one hand, you had the president's very public goals: weaken the dollar, keep interest rates at rock bottom, and basically bring the Fed under White House control. But on the other hand, you had Kevin Warsh, who Wall Street saw as a traditional, steady hand, a guy who believes in a strong dollar and an independent Fed. This conflict is the absolute key to the whole story.
And that brings us to the big reveal. Let's decode what was really going on in Wall Street's mind. Why did a choice that seemed to promise stability cause a complete crash in so-called safe assets?
Well, here's the secret. The truth is often hiding in plain sight. This wasn't a crash of value. It was a crash of fear. The prices of gold and Bitcoin didn't suddenly tank because they became worthless. No, they fell because the main reason people were holding them, that intense, gripping fear of a dollar collapse, just evaporated overnight.
Let's just walk through the chain reaction, step by step. 1. Trump announces Walsh. 2. Wall Street sees him as a stable, level-headed choice who will protect the dollar. 3. Because of that, the fear of a dollar crisis just shrinks dramatically. 4. All of a sudden, that expensive insurance policy, gold, silver, Bitcoin, doesn't seem so necessary anymore. So what do investors do? They sell it off and move their money back into the traditional stock market.
And this quote just nails it. It wasn't panic selling, it was relief selling. The entire market just took a collective sigh of relief, thinking, okay, our dollar's going to be okay. That sudden sense of calm is what pulled the trigger on the sell-off. It's totally counterintuitive, but it makes perfect sense when you think about it.
If you find our analysis insightful, please do us a huge favor and like, share, and subscribe. That way, you won't miss out on what we break down next.
So, what does this all mean for you, the individual investor? How are you supposed to read a situation like this? Well, it really all comes down to understanding the difference between reacting to panic and spotting an opportunity.
In any wild market swing, there are basically two kinds of players. First, you've got the speculator. This is the person who buys gold at the very top just because of FOMO, fear of missing out. They don't really have a strategy, so when the news changes and prices drop, they panic and sell for a loss. But then you have the strategic investor. This person knows exactly why they own an asset, and they see a moment of volatility not as a threat, but as a potential opportunity to buy.
At the end of the day, the biggest lesson here is pretty simple. Buying high out of fear and selling low out of panic is a guaranteed way to lose money. But for the savvy investor, the person who understands the why behind the market's moves, these moments of intense emotion, that's not a crisis. That's where the real opportunities are born.
And let's end on this thought, because it's so powerful. The person who chases a hot trend and then panic sells at the first sign of trouble, they are effectively making the financially savvy investor rich. They're selling their assets at a discount, and guess who's on the other side of that trade, waiting to buy? The strategic investor.
So I'll just leave you with this question to think about. In a market that's so clearly driven by emotion, by fear, and by greed, are you the person who's just reacting to the headlines, or are you learning how to see the opportunity that's so often hidden just behind them? Thanks for joining me.